Hi guys, welcome back. So today was one of the days again that the market is slightly up and most of the individual stocks are down, especially the small and medium caps again. Dow Jones was breaking out from this small triangle it was forming, and today it looks like it's choosing a direction to break out above, to be up 0.7%, but the volume is not big. But today it looks like it's breaking the 20-day moving average. So the next support would be the previous gap up of 13,700 to 800. If this support does not hold, the next support would be here at 13,600. So during the whole run up, it was due to the high expectation of all the mega cap stocks earning, because everyone kind of expected the earning to be extra good anyways. But since the earning has been out from the FANG stocks, we have only been seeing a lot of selling pressure. It's been a whole week since we see red every day. So right now the best case scenario is for Nasdaq to consolidate above the support to digest all of this selling pressure. Yet, the Russell 2000 still managed to stay above the support of 226 today, and it was up about 0.5% and close to 25.99. So slightly 1 cent below the support. So for now, it still looks okay. It was backtesting the 10-day moving average and bounced back up quickly to stay up the support. So for now, it still looks to be within this uptrend and having some pullback. But even so, a lot of the small medium caps were down today. I guess most of our portfolio were not doing well. The China Technology ETF CQQQ dropped 0.9% today, but as you see, it dropped exactly at the support trend line I drew before, and looks like it has gotten supported and bounced back up. I think this support would likely hold to be continue an uptrend, even though right now it's a very slight uptrend. So I do expect it to rebound from here. I'll give it another few days. If it does drop below this trend line, we can see if it can jump back up within 1 to 3 days to not consider it breaking the support. So I do think the backtesting on this trend line might be a good buying dip opportunity for some of the Chinese tech stocks. The only thing is, right now, if we buy the dip, we gotta be more careful, and for the long term, we can separate small order. In case it drops further, we can still have some cash. And for the short term, we need to have stop loss to protect our holdings. And it's similar with the PGJ, dropping near 1%, but with very little volume. We see that the whole time we are still on the slight uptrend, rebounding from the big fall from before, and the volume has been decreasing. Today's drop was mainly because of BIDU dropping, and I do think for this Chinese big techs, any dip right now would be a good buying opportunity, especially it's backtesting some support. So all the heavyweight stocks were knocked down so much. Baba was down 0.1%. Tencent was even up 0.59%. And so was IQ, up 2.3%. At some point, it was up 4.7%, near 5% in the morning. And then because the market was down, so it was pulled down with the rest of the stocks. My new added stocks, Miniso, were also up 0.6%. So I think the heavy weighted stocks that were down quite a bit was BIDU. It was down 2.56%. So BIDU got downgraded the target price by the Swiss bank to be $356, but still gave a rating of outperform. So compared to the closing price today of 204, we still have 74% upside to go. I think BIDU should have a lot more good news coming up in this year or the next few months. And I would say every dip might be a good buying opportunity. But right now it looks like it's trying to break the support here to make lower lows than before. So if you want to grab the dip, you need to be prepared that it might not be the lowest point and I would think it's for long-term investor, but for short-term investors, you might want to put a stop loss. So I think a lot of our tech stocks were selling off because of the sell-off from the Hang Seng Index last night. It's been the second day since the sell-off and breaking the support, because last week it was breaking out the 60 MA resistance, showing a strong signal. And yet, right away it went down, making this a false breakout, a bull trap. But last week when it was breaking out, I also said the volume was quite small, so we need to watch out. And the next day, right away, it showed the false breakout. I think it was the speech of Biden's Buy American that caused a lot of the Chinese stocks to sell off, especially the tech stocks. So I will make a video separately for this because I have done a lot of research over the weekend as well. Otherwise, I did think the Hang Seng Index was heading north, breaking out of this consolidation for a while already. But right now it's backtesting the 120-day moving average, which had also supported the big sell-off at the end of March due to the news of the SEC passing the delisting law. So I would expect this support to hold, and it might have created a good dip for buying opportunity for a lot of the big techs. So now let's talk about our stocks. So our baby NIO was actually increasing in the morning. I think it was still digesting some good news from the earnings. So it was up near 3% in the morning, and then because of the whole sell-off with a lot of other stocks, so it went down together. So last Thursday when we were on this day, I shared my point of view on the earning and I was quite happy with it. And I also said that I think that baby NIO had already turned reversal from the correction, and it shows breaking out of this medium line on the Bollinger Band. So I would expect it to consolidate or backtest some support first after breaking out. And I said at most it can drop to 36 or 37. And last Friday morning in the pre-market it was dropping quite a bit. It opened at 37. I think a lot of people got scared and then quickly move up from minus near 5% to be up near 3%. I think it went from minus near 5% all the way to be up near 5%. So within the first half an hour, it was quite unexpected, and of course before the pull up, shake off some weak hands first. So right now it's looking more healthy, shaking out more short-term investors. So I think I'm not so worried about NIO now. So let's talk about EH and LKCO more, because it's so different, the two of them, because these two are just so different that I think it's worth a screenshot, because they're both my top stocks. And while one is down near 17%, the other one is up 17%. So something funny to share here is that in the morning when my Discord member asked me why is EH down a lot, I was joking that maybe people sold EH to buy LKCO. And then another Discord member replied I did exactly that. So I find it funny because these two are really extreme today, and it completely balanced off my portfolio. While one is so much down and bleeding and the other one is making up. So yeah. But jokes aside, there was really no news why EH has been dropping so much today. And it was dropping with quite some volume too, even more than the April 12th, the Monday, we saw a big sell-off before the earning. And also this 3 days movement, the combination of them shows very bearish signal. And also it has wiped off basically the whole run up for the last week and a half. So very strong selling pressure here. So I was monitoring the EH fall today since the morning. When the market opened, I screenshot at 9:31 a.m., 9:35, 9:39. You can see the time here, and it first opened with the big volume of some large selling order of 830,000 here. And you can see the large order was significantly bigger than the small and medium orders. And then we can see that within the first 10 minutes, the large order did not change at all, while the medium and small order just continue rising to be bigger than the large order. So you can see here in this screen cap, after a few minutes, the medium order and the small order were already much bigger than the large order, which did not change since the beginning, right? But yet, when we look at the first 5 minutes and 10 minutes, we see the share price just open up low and continue driving down further so quickly. But the large order was made here at the market open, while the small and medium order just continue driving it further down. So it makes me feel that it started off with the large order and the effect was enough to drive up all of this small and medium order to continue selling off and driving down the share price lower and lower. And I think every time after the consolidation, there is the large order to drive it down again. And that would be enough for the medium and small order to continue selling, adding the volume up. So you see that later on the day, the small and medium order were already much bigger than the large order compared to the beginning of the day in the morning. So you can compare since the beginning, the large order was significantly bigger than the medium and small. And in the end, while later on the large order was significantly smaller than the medium and small order. Now, if we compare with the one at 2 in the afternoon and also the one at the closing on the right, we can see that the large order did not change much. It's from 6.4 to 6.9, while the medium order and the small order grew much more. 20% for medium order and 30 to 40% for small order. So we can see in the last 2 hours, it was majority of medium and especially small orders. So the last 2 trading hours was here. And as you can see, the share price just nearly stay flat, while a lot of small orders were selling off. And at the end of the 5 minutes, it has the biggest volume of the whole day. So if the large order did not make that, it would be a lot of the medium, especially small orders, that make this much selling volume. So that's why I find it very interesting to watch and think that today it really looks like the bigger institution is using large order in the morning to scare off a lot of retail investors and continue driving it down further. And whenever it gets into consolidation, there is a bigger order to add on top to drive more small order to sell. So then near the end of the day and actually the second part of the day, it was mostly retail investors selling off. So if that's true, I think it's institutions trying to shake off more retail investors to sell off, because we are getting near to the test flight and the big reveal on the new model that can go 300 to 400 kilometer range, and it's in May this month and it's getting close, so it would make sense for some shake off before. And another reason it would be to attract more short seller. Hopefully the short position piling up would help us gain more fuel for later. So that's why I bought the dip today at 23.2. And I also have shared on the Discord. I said that I added a little bit AH, but I'm prepared that it can drop further. And if so, the next support is 20 to 21. So I have been gathering more information and I'm still working on the EH videos. But for now, I want to give you some update on the price action and what I am doing first. On the other hand, LKCO had a great run up today to be up 17%, even though it's down 2% after hours. So today was the hearing, and a lot of us on the Discord, including myself, had dialed in to listen to the whole case. So it was all we expected that the Defense Department did not offer any solid evidence. In fact, they kind of indirectly admitted they have no solid proof, no evidence. All I could hear was that they were talking about a lot of other stuff, like the share price movement and how it's different than Xiaomi, while it's indeed not much different than Xiaomi. On the other hand, Luokang Technology can just keep focusing on the fact that they have no proof, they have no solid evidence. And if this is the case, then many other companies can be accused the same thing to be associated with government or military. So that's why during the whole hearing, the share price just kept on running up in the morning. So it opened up First, with a little bit of dropping, dipping quickly to do some final shaking first, and then consolidate, move up a ladder, consolidate more, move up a ladder again, consolidate more, and then move it up all the way to the top of $1.96. And then near the end of the hearing, it started to sell off quickly. You can see from this candlestick, it went basically down 20% in a matter of 1 or 2 minutes. I think it triggered a lot of trailing stop limit. I think a lot of people would have set it up in the morning, so that's why it triggered up a lot of the selling order at the same time automatically, so it can go down so fast. And after that, it just continued downward trends. I think it's expected already to have the sell the news action. So in the morning, within a few minutes, it has quite aggressively passed the previous high of 1.47 to continue the run up, and that is why during the sell-off, the previous high has become the support level here, and the share price bounced back up. Let's look at the 1-hour chart. We have broke out, consolidate, broke out, consolidate, broke out again, and right now it looks to be consolidating again. So it's going on a healthy uptrend by a staircase, making higher high and higher lows. At this point of the market, I think LKCO is one of the most bullish looking trend stocks that we can see. Very rare to find, but of course it's because of the hearing. And I do think if given the same situation back in January or early February, we could have seen it shooting straight up, but right now we are still in a very strange market. Short sellers still dominating, so that's why it can quickly go back down hard. And don't be surprised to see the sell-off given the market scenario right now. So now we are supported by the previous high of 1.47, and the best case scenario would be for it to consolidate before making new high again. But this new high of 1.96 is quite difficult because it's quite high. So this is the best case scenario, because we will expect the result for the hearing around the end of Wednesday or early Thursday, as the deadline for LKCO to stay listed on Nasdaq would be end of Friday. So that's why the court would need to give results before that. So hopefully it would be good news, so we can see it challenging the next high. Otherwise, if the result is the opposite, we can expect to see continued selling off. But anyways, on the daily chart, this kind of hammer line is never good to see. As you see previously, every time we see a hammer line like this, we see what happened afterwards. Okay? Now that's it for today. I am still hanging in here. In this strange environment, if you're doing short-term trades, it's not a bad idea to take profit with 1 or 2 days of rising, like 5 to 10% profit, and then move on to the next trade with tight stop loss, even though you have to lose a bit. And for the long-term ones, as long as you have done your DD and you have strong belief on it, it might be better to not look at the price action so much. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.